Hi there.
Hello,
Hello,
this is Jim.
how are you?
Good, good. So I have a question before we start. What happens if the Supreme Court rejects the tariffs and says they're illegal?
Um, that's a great question. I don't know exactly. My guess is the Congress will be jumping into action to try and create laws for those tariffs. At least the Republican side will, and we'll see what happens from there. That being said, all the arguments I've seen seem to at least lean towards it being constitutional for the president to initiate tariffs. So, because his job is international trade and foreign relations and things like that. So, I don't know what'll happen there. But that being said, as far as the portfolios, you may have a drop in the stock market. You may have a little drop in some other things, but gold, silver, treasuries, those things should still perform during that period, which actually kind of leads me to something that's come up a few times over the last couple weeks. A few people noticed that their account values had gone up significantly and then pulled back a little bit over the last couple weeks. And the primary reason that happened was gold and silver. Gold and silver just shot way up, and then some people started taking profits. We've since seen that hit a bottom and start coming back up, and we're not that far from hitting new highs. So I wouldn't be
Okay,
surprised if before the end of the year we see new highs on both silver and gold.
thank you. I'll go ahead and mute.
Okay, so today is going to be our normal agenda. We'll just go through the topics on the screen. Next month, we're actually going to do our annual review, just kind of review what we expected would happen, what has happened, and then starting in the next year, in the new year, we'll have some new topics. So let's jump right in. So the stock market has continued to go up. Something to keep in mind here. The Fed said they're going to start quantitative easing, which means they're going to start printing money. So while they're both lowering interest rates and potentially printing money, that gives me the impression that the market and all assets will continue to rise for a period of time. That rise will be at the risk of a drop, meaning the value of the investments won't be going up, the price will. So that's a big distinction. So it just increases the risk that there'll be a significant drop, and I'll show you a little bit more. So the market should continue to go up through the next 6 months, I would guess. Next. Okay. So the treasuries, you'll see the yields at 4.6 on the 20-year treasuries, still below its peak. And remember, when yields go down, treasury values go up and vice versa. So as the Fed continues to cut rates, we should see these treasury yields go down. And when we see the market start to correct, you should see these yields go down, which both cause the value of the treasuries to go up. So Senate expected to begin voting toward reopening. This has started. I haven't heard yet if the House has voted yet on opening the government, but essentially, as far as the market, as far as the economy, we haven't seen any major effects of the shutdown. Certainly at the family and personal level, we have seen some effects, but I hope that gets remedied here pretty quickly. The Fed again is likely to cut rates for one more time before the end of the year and again start quantitative easing. Trump will be appointing a new head of the Fed in the first quarter of next year, and that may alter and potentially speed up the interest rate cuts going forward. Okay, so when I was talking about valuation versus the market price, valuation is a term that basically is how it compares historically to normal valuations. So you'll see we're at 40.3. Last month we were at 40.1. So the PE ratio continues to rise. Next year, we're going to go into a lot more detail about what this means, why it means what it means, and some detail about how you invest accordingly. But you'll see we're at the second highest point in history, slowly climbing towards the highest point. You guys may remember the 2000.com bubble, where you had hundreds of stocks selling at unimaginable prices. They had zero earnings. They were burning cash like nobody's business, but they were trading for $100 a share. So our average PE now is nearing that. We've got stocks that are hugely overvalued. They're being valued at prices based on their current income for 100 years from now. So there is going to be a drop. What we are seeing is earnings are rising rapidly as well. So with earnings rising and prices also rising, we're going to see hopefully it level off and start to come down and not be a significant drop. But that likelihood is still out there, that we have a 50+% drop. So inflation has ticked up a little bit more. What we're seeing is, by the way, 2.52 is historically normal for inflation. So we were pretty low over the last several months. Now we're at kind of a normal rate. And the price, other than us in California, the price of gas has gone down significantly. Here in California, it's actually gone up over the last month. Thank you, Mr. Newsom. But historically, when gas prices come down, the costs of goods come down as well because transportation is cheaper. So I expect we'll see again a leveling off of inflation. We don't want zero inflation. We do want some inflation, but I would say keeping it below 3 would be ideal. The gold index, as I said, you see the peak right about the end of October, beginning of November. Then it dropped. This is a normal cycle when it comes to investing. You have some exuberance. You'll see the very steep part of that curve from September to the end of October, where the line steepened, and then people took profit. And that is a normal occurrence. And then what's likely to happen from here is it starts going up. It's actually higher than what it's showing there now, and then sets new highs. And I think we could set new highs certainly by the end of the year, if not sooner, on both gold and silver. And so you'll see a very similar chart with silver here. It's important that we be in both of these investments because they are inflationary, meaning as inflation goes up, as things get more expensive, gold and silver move with that inflation. Also, we're seeing a big push by governments and even corporations to add gold and silver to their bottom line. So we're seeing those assets be purchased and stored at a significant level right now. So that's also why I expect we're going to see higher prices on both. Okay, so where we started the year with the talk of tariffs, as the question we started off with kind of addressed, tariffs are a useful tool to get governments and companies to the negotiating table. And what we found is when they come to the table, generally we create some deals that work for both sides. Some of the countries, China, for example, has been a little bit more difficult. They have the most to gain and the most to lose. So I suspect we'll keep negotiating there and creating deals that work for both countries. As far as tariffs go, we haven't seen the tariffs create inflation at this point. It could be that changes, but for now, knock on wood, it has not come to fruition. Tax cuts. So again, we expected tax cuts at the beginning of the year. Those cuts were built into the Big Beautiful Bill, specifically for folks here in California. You had the SALT or state and local tax deduction increased from 10,000 to 40,000. You may remember in 2017 when Trump's tax bill came through, it actually reduced that. So for a lot of us here in California, it increased our tax liability. This undoes that plus some. And then for those of us that are 65 and over, there's an additional 6,000 deduction to offset the taxes on Social Security. So if you're 65 and not collecting Social Security, you still get to utilize that. So you'll see that for this calendar year, 2025. Deregulation, we're seeing, other than here in California, the ability to get things built, the ability to get projects moving forward, because we have less bureaucracy holding up things. So a perfect example of the opposite of that is in LA with all of the homes that burnt down. I believe last I heard, there was not a single home that has been started rebuilding yet. There's lots that have been cleared, but nobody has gotten all the permits to start rebuilding, which if you had your house burned down, I think you'd be pretty upset about that. Reduction of wasteful spending. So something that just happened in the last week, and I think in part put pressure on the Democrats to reopen the government, was one of the things they were pushing for was to have the Obamacare subsidies funded by the government, which was $35 trillion that they wanted sent directly to the insurance companies. And Trump suggested, how about instead of doing that, we send that 35 billion directly to the citizens. And I think most citizens would be happy to receive that. And it kind of shone a light on one of the issues that if we keep sending money to these insurance companies, who, by the way, have 400, 500, 600% profits, those insurance bills are just going to keep going up. What we need to do is create competition and have the insurance companies actually have to compete for your business. And that will actually drive some of these prices down. Just to give you an idea, my insurance, which was both health and dental for myself, my wife, and my two kids, was about $19.50 a month here in California. We're all fairly young and healthy. It was scheduled to go up in January to $2,600. So we've found alternative insurance from the Covered California plan. So if you'd like to hear what we did and some ideas on how to potentially cut that, I'm happy to talk about that. And then finally, interest rates and Fed policy. We delved pretty deeply into that. I think rates will continue to come down, and the Fed, as I said, will start printing, maybe not this year, but early next year. That tells us one thing, that the Fed feels that the economy is slowing. So again, just one more trigger for the market going down. So any questions about any of that?
We'll give you just another second or two, and we'll hit the super fun disclosure slides in the meantime.
Okay, I'd like somebody to speed read this for us. So here's a few topics that we're going to cover in 2026. Basically, why we invest the way we do. So valuation, we talked a little bit about that today. What we're actually going to do is delve a little deeper into how you look at valuation, how you might choose a stock or an investment based on that. High valuation investing versus low valuation investing. We invest differently depending on those valuations. Lowering the floor. So this is an important concept of how we invest, and it actually should be raising the floor. Raising the floor is making sure you don't have those big losses, that your floor for how you perform actually is raised, so your losses might be down 5% versus potentially down 25%. So how you do that and why it's important, we'll cover that. Importance of being on the right side of interest rates. So interest rates, you're either paying someone or you're getting paid. And so We'll distinguish where you want to be, how you can invest aggressively or conservatively and be on the right side of interest rates. Alternative investments, so cryptos, gold and silver examples, real estate, talking about those types of issues. And then the importance of cash flow. Cash flow, especially when you're retired, making sure you have money that's coming in, replacing the money you're spending. And so those are some of the topics that we'll be covering. And we might add in a few more starting in January, like an investing 101 presentation. And again, we'll record everything. So if you can make it, great. If you can't, you'll have access to those recordings. Any other topics, anything you have thoughts about that you'd like us to address?
Also, as Matt mentioned, we are recording these and they are up on our YouTube channel. And I usually get the day's current one edited and through compliance within a few days after, but you're always welcome to request that I send it sooner than later, or just pop on to the YouTube channel and see if the latest one is there.